Employee Retention Tax Credit, ERTC, and how you can qualify for it according to the IRS in the USA. The Employee Retention Tax Credit, ERTC, was introduced as part of the Coronavirus Aid, Relief, and Economic Security (CARES) Act to provide relief to employers affected by the pandemic. The ERTC provides a refundable tax credit to eligible employers who keep their employees on the payroll during the pandemic, even if their business is not operating at full capacity. To qualify for the ERTC, there are certain criteria that must be met. Let's take a closer look at what these criteria are. Firstly, the ERTC is available to employers of all sizes who were either fully or partially suspended during any calendar quarter in 2020 or 2021 as a result of orders from a governmental authority due to COVID-19, or experienced a significant decline in gross receipts. A significant decline in gross receipts means that the employer's gross receipts for a calendar quarter in 2020 or 2021 are less than 50% of its gross receipts for the same calendar quarter in the prior year. Once the employer's gross receipts for a calendar quarter in 2020 or 2021 exceed 80% of its gross receipts for the same calendar quarter in the prior year, the employer is no longer eligible for the ERTC for that quarter. Secondly, the ERTC is available to employers who retained employees during the pandemic. The credit is available to eligible employers for each employee retained on their payroll, up to a maximum of $7,000 per employee per quarter in 2021 and up to a maximum of $5,000 per employee per year in 2020. To qualify for the ERTC, the employee must have been paid wages during the period in which the employer is eligible for the credit. For the 2020 tax year, the eligible period is from March 13, 2020 through December 31, 2020, and for the 2021 tax year, the eligible period is from January 1, 2021 through December 31, 2021. The third criteria for eligibility is that the employer must not have received a Paycheck Protection Program loan or any other Small Business Administration (SBA) loan for the same wages that are used to calculate the ERTC. Now that we have a better understanding of what the eligibility criteria are, let's take a look at how the ERTC works. The ERTC is a refundable tax credit against certain employment taxes, including the employer's share of Social Security tax. The credit is claimed on Form 941, which is filed quarterly with the IRS. If the credit exceeds the employer's employment tax liability, the excess is treated as an overpayment and refunded to the employer. For example, if an employer has an employment tax liability of $20,000 and is eligible for a $15,000 ERTC, the employer can apply the $15,000 credit against the $20,000 liability and only owe $5,000 in employment taxes for that quarter. The remaining $10,000 credit would be treated as an overpayment and refunded to the employer. It is important to note that employers who received a Paycheck Protection Program loan are still eligible for the ERTC for wages that are not forgiven under the Paycheck Protection Program loan. Additionally, eligible employers can take advantage of both the ERTC and a Work Opportunity Tax Credit, WOTC, for the same employee, but not for the same wages.